This inflation report is not good for, I don't think it's good for stocks, and yet the market's not reacting terribly.
Stuart, you're spot on. The PPI report is showing us that wholesale inflation is still surging, but the market is pausing to see what happens with tomorrow's CPI report. And I think I'll tell you, I mean, a hot CPI is the worst case scenario for this market. My gut tells me we just have not won this war against inflation. So if you see gasoline prices heading towards over $4 a gallon, if you see shelter prices on the last report up 5.7% year over year, it is miserable for first-time home buyers or young families trying to start and buy a home. So I think the market is not going to get to be able to push to all-time highs this year unless we get a significant reduction in inflation tomorrow, Stuart. I just don't think we're going to see it.
I mean, I think you can just say goodbye to any a possibility of rate cuts in the immediate future, right?
Yeah.
But does this open the door to a possible rate hike?
Well, I mean, the Fed, they don't want to admit it, but the Fed does not want to do what it takes to bring inflation under control. They just don't want to do it. Stuart, they got it wrong. They stopped raising rates way too early, and now they're stuck. So what their hope is that they just do nothing, that the laws of economics will be suspended, and inflation will just magically come down by itself. And we're not going to see it. Employment is still strong. We're seeing wages continue to go up. This is not good for the Fed, so I just think inflation is going to be more stubborn than what the Fed wants in the short term, Stuart.
You got it, David Nicholas. I'm glad we repaired the audio connection. Good to have you on the show. See you again real soon.